Good morning and welcome to the internet's only live daily housing show exclusively on BAM. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss negative home prices, what that really means, revised housing market forecasts from Fannie Mae and Goldman Sachs, and Powell's warning for home buyers. Today is Tuesday, June 27, 2023. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Pleasure to have you back here on the Hot Sheet. Hit the thumbs up and consider sharing this particular stream with somebody who not only wants a 24-hour look back on housing, but on someone who's been skeptical of home prices. They will want to see this. Case-Shiller, the gold standard, just came out this morning with their latest report. Their data is typically lagging, so this is all April. Hello from Las Vegas and Montclair, New Jersey. Let me know in the comments where you're all tuning in from today. All right, so Case-Shiller, the gold standard. Here's the big headline that you will see probably as early as noon today on mainstream media. Year over year prices, U.S. home prices, for the first time since 2012 are in the negatives. Yes, that's right. Year over year home prices for the first time since 2012 are in the negatives at a staggering 0.2%. But they're not going to put that in the headline. What they're going to put in the headline is the first time since 2012 home prices are in the negatives. You're going to have to dig deeper, maybe to paragraph 2, 3, or even to the very end of these stories, or maybe some of these mainstream media outlets aren't even going to report the full story. We're going to do that right here. So yes, 0.2% year over year for the first time since 2012. You can see the chart in front of you. Lance Lambert spit that out immediately this morning from Fortune. Okay, so that is true. But what also is true is the 1.3% increase month over month in April. We've now had consistent month over month gains here in 2023 for U.S. home prices. Case-Shiller's data is actually showing us that we've probably hit the bottom on home prices. Month over month in U.S. home prices measured by Case-Shiller have gone up each of the last 3 months. Okay, what also is true is a 2.3% increase in home prices year to date. That's through April, according to Case-Shiller. Again, the gold standard when it comes to U.S. home prices. We've covered all the different U.S. home price forecasts. I have some updates for you here on this show. But Case-Shiller is widely accepted as the number one source for macro home prices. So here are the numbers once again, just released this morning. Negative 0.2% year over year for the first time since 2012. Yes, but a very small decline. 1.3% month over month in April. We get another month over month increase. That year over year number goes back to positive, and maybe we only have 1 month in the negatives. A 2.3% increase year to date on home prices. And for everybody that was waiting for this cliff, this 10% cliff, and yes, that did happen in some places. See Austin, Texas, see Boise, Idaho. It didn't happen across the country. So for everyone that was waiting for this 10% home price cliff, they're still waiting. The low point in January off of the 2022 peak was a total of negative 5.1% for U.S. home prices. We lost 5% off U.S. home prices when we just came off of over 40% home price gains in the 2 years prior. Right now, as we sit here today, we're down 2.4% off of that peak. And so we can all imagine when May's numbers come out that those home prices are going to be up. And our year-to-date number right now, as we sit here off the peak, that number will be smaller. And this year-over-year number will be potentially a 1-month headline. You've got to decide, how you're going to educate buyers if you're advising buyers or you're advising sellers in your market. Every market's different. But just keep in mind, they're going to see that mainstream media headline as early as today that home prices are negative for the first time since 2012. And likely that's all they're going to see. The rest of the story is important. It's much more important than what I'm about to tell you, which is the Fannie Mae home price outlook. They just updated their forecast. It's worth considering. I also have the Goldman Sachs. We're going to go through both of those right now, but these are obviously just forecasts. Fannie Mae reaffirms their home price outlook. So they're really unchanged from their last read. They are projecting 1.2% in the negative from quarter four 2022 to quarter four 2023. Fannie Mae remembers one of the most bearish outlooks on home prices. If you go back to past hot sheets, or certainly if you're a member of BAMX, you have access to the daily downloads there all in one place now. Hit the link below, of course, for that. But if you go backwards in time, we've shared a whole bunch of these forecasts, and most are in the positives. Fannie Mae is one on the other side. It's one to consider. We don't want to be one-sided when it comes to home prices. But think about that. People that are waiting for the cliff, Fannie Mae being one of the most bearish on home prices, only believes that values are going to drop 1.2% from the end of this year from the end of last year, quarter 22, to the end of this year. Okay. So really, year over year, Case-Shiller is saying we're down 0.2%. Fannie Mae is saying that they believe we're going to lose another 1% off of home values from now till the end of the year. Does that sound like a cliff to home buyers? One of the most bearish forecasters on home prices right now. Does it sound like you're going to get some type of killer deal when home prices are going to drop another 1%? Fannie Mae also believes that from the end of this year to the end of next year, so quarter four 2023 to quarter four 2024, home prices will drop another 2.2%. So if Fannie Mae is correct, and they're at odds with all of the other forecasters being in the opposite direction, the negatives, they believe that from today until the end of 2024, home prices are going to drop another 3.2%. So on a $300,000 home, you could save about $10,000 as a home buyer by waiting 18 months. Is the 18 months worth the $10,000? To some, it may be. It just may be. They also believe the 30-year fixed is going to be down to 5.6%, but that won't be until the end of 2024. Fannie Mae, and let's see what they believe here on the 30-year fixed mortgage rate for this year. They believe quarter three will be at 6.6%, so really unchanged from the weekly survey that we've had. And quarter four, the average will be 6.3%. They believe quarter one of next year will have an average of 6.1%, while quarter two of next year, 5.9%. Quarter three of 2024, 5.8. And again, we'll end the year with an average in quarter four of 5.6. So Fannie Mae does believe in a downward trend for the 30-year fixed, but not a fast downward trend, not a significant drop. They believe that will drop maybe about 1.25% to 1.5% between now and the end of this year, and it'll be a slow declining drop. There are some that are a little bit more bullish on the 30-year fix than Fannie Mae. We've covered those. Some of those would suggest that we're going to touch 5.9 as early as quarter four of this year. It's hard to believe when you keep looking at it day to day right now as we sit just outside of July 2023. Their average for the year next year is 5.9%. Their average for this year is 6.4. I think a lot of buyers would take 6.4 right about now. So that's the Fannie Mae forecast. Let's jump into the Goldman Sachs forecast. Goldman Sachs, just another way to look at it. We want to look at as many data points as we possibly can on the macro, have a good aggregate, have a good average, and then relate that back into our markets. Goldman Sachs, big takeaway from their recent housing forecast would be that their 30-year fix by the end of quarter four 2023 is going to be at 6.4%. Okay, so by the end of this year, they're at 6.4%. By the end of this year, Fannie Mae was at 6.3% on the 30 years. So both Goldman Sachs and Fannie Mae don't see a 5 handle on the 30-year fixed at the end of this year. They do see a 5.9% average on the 30-year fixed in 2024. I'm about to share a clip from Jerome Powell that would suggest waiting for these is a good thing for home buyers. I think we might find some evidence to dispute that. So stick around for that clip. But let's just go through this Goldman Sachs data really quick. By the way, all of the charts that I showed you, the two brand new fortune charts from Case-Shiller, as well as the Fannie Mae and Goldman Sachs table here, they're down below in BAMX. Join me in BAMX to get all of our best content on BAM, all of our courses, the live streams, as well as the private Facebook community. Your daily download from the hot sheet is there every single day, all categorized in one place. You do not want to miss it. Go down below and subscribe to BAMX and join me there. Okay, housing starts for Goldman Sachs, relatively flat throughout the rest of the year, just over 1.4. Annual data for 2024, they believe, will be up over 1.5. So they believe more housing starts in 2024 than 2023. Case-Shiller year-over-year price change. Right now, Case-Shiller's got us year-over-year at negative 0.2%. Okay, well, Goldman Sachs believes that number, and we just covered that new Case-Shiller report from today, that's through April. They believe by the time Case-Shiller data comes out for May and June, that the year-over-year home prices are going to be negative 1.7%. They believe year-over-year home prices, according to Case-Shiller, will end up at the end of quarter three at negative 3.7%. and quarter four negative 2.2%. So Goldman Sachs, not real positive on home prices and what they see coming down the line from what they believe Case-Shiller, of course, the gold standard, will come out with later in the year. Okay, interesting. Annual data for 2024, though, they believe home prices will be up 2.8% year over year. Of course, Fannie Mae believes it will be the opposite. The 10-year Treasury, they believe, is going to be essentially flat for the rest of the year and flat in 2024 at this 3.8. They believe it'll actually be a little higher than it is today, upwards of 3.9 to end the year. Okay, now hopefully that will still mean we could have a declining 30-year fix. They believe that the 30-year fix will decline slowly, as does Fannie Mae, ending in 2024 with an average of 5.9. And it's because the gap, remember, the gap between the 30-year and the 10-year right now is abnormally larger than ever since the bank failures than it historically has been. They believe the gap is going to shrink, not necessarily the 10-year. So we may be in different times where we're watching the 10-year and the 10-year is not changing, but the gap between that and the 30-year starts to shrink as investors get more comfortable with where the economy is heading. Of course, they haven't been that comfortable as of late, and we haven't seen that happen just yet. Okay, so there's the Goldman Sachs update. Again, all of the four charts that I had today, the Case-Shiller latest report, the Fannie Mae table, the Goldman Sachs table, all available for you down below in BAMX. Let's take a look at Jerome Powell. This was a clip that was just brought to my attention from June, a recent clip from Jerome Powell, and I think it's fascinating the advice he gives to home buyers. Let's take a look.
I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we ideally we do our work in a way that where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels.
Okay, so we need a bit of a reset for home buyers. Supply and demand need to be in a more normal place. Rates need to be low again. What Jerome Powell just said there to home buyers is don't buy and wait. Is that the advice you're giving to your home buyers? I'd love to know from you. Every market's different, of course, and maybe you are giving that advice, maybe on a one-on-one situation, depending on that family or buyer's needs, it's the right advice. But will you secure that big of a deal by waiting if you're a home buyer? If you wait for this reset that Fannie Mae and Goldman Sachs believes is going to be upwards of 3%. Goldman Sachs, 3% by the end of this year-over-year home price declines. Fannie Mae, 3% over the next 18 months. Is that the reset that home buyers should be waiting for? Of course, Case-Shiller has shown us that home prices have gone up the last 3 months. We just took a look at that. It's why the data is important when educating home buyers. Case-Shiller shows us that since the low point in January, home prices only fell 5.1% off the 22 peak. Right now, we're only off 2.4% off of that peak, and home prices are going up month over month. But Jerome Powell says buyers should wait for this reset. Supply and demand. How long are we away from supply and demand being even? Well, on the supply side, a long ways away. But Jerome Powell's trying to talk people out of that demand side to lower demand. We know that Jerome Powell wants 7% 30-year mortgage interest rates throughout the rest of this year. That's what he wants. He wants that along with more job losses. And then he wants home buyers to wait for rates to be low again. Well, both Fannie Mae and Goldman Sachs in the last couple of days, as we just took a look at, reported that 30-year fixed rates aren't going to get out of the sixes this year. They're going to be at about 6.5 to end the year. I know there are some bullish reports that believe we'll be at 5.9. But a lot of these forecasters are now saying we'll end the year of 2024 at 4.9. I mean, at 5.9. I'm sorry. 4.9 would open up the floodgates, wouldn't it? At 5.9. So how long is a buyer willing to wait to get 3 to 5% off of the home price and 0.5% off of the 30-year fix? Everybody has to make that decision personally. If you're a real estate agent, a broker, an advisor in real estate, all you can do is give the data, the macro data of what's happening, of how mainstream media is going to highlight one part of the story, and that you have the full story. You not only have the full story on the macro because you tune into the hot sheet, but you have the full story in your market, and show a side-by-side comparison. Migration will impact your market. We've talked about that in the past, how a market can stay quote unquote overvalued by the models for a long time because there are people moving with their feet. They're migrating in to your community as opposed to out of your community. Quick look at the 10-year today, relatively flat, in line with what Goldman Sachs believes the spot we're going to be in for really the next year and a half. We're at 3.705, just down a tick. Yesterday's 30-year fixed rate on the daily survey went down to 6.91 from 6.92. Again, the weekly survey was down to 6.67 according to the Freddie Mac 30-year fixed weekly to end last week. It's your update there on all things housing. It's the only daily live housing show. I'd love for you to consider forwarding this this particular video with somebody who does in housing in any way, whether they're an attorney, a broker, an inspector, an appraiser, please consider sharing this one. Or maybe it's that doom and gloomer uncle who has been telling you home prices are going to drop for the last 3 years. Later today on the channel at 2 p.m., we've got a new real word. I've got some other reactions to things that are happening in real estate right now. You do not want to miss that. Join me down below in BAMX. And until later today or in the comments, I'll see you tomorrow morning. Toodaloo.